China accounts for nearly two-thirds of the upstream chain of Bitcoin production, known as Bitcoin mining. A survey by the Cambridge Center for Alternative Finance shows that Chinese miners account for more than 75% of Bitcoin's network-wide computing power in September 2019, and about 65% in April 2020. China has dominated Bitcoin mining for more than a decade. Bitcoin proponents argue that the increase in carbon emissions from mining Bitcoin is a drop in the bucket globally. Bitcoin prices have soared since 2017, as more and more public attention has turned to the energy and environmental impact of cryptocurrencies. How would China balance its Bitcoin production with environmental protection? Chinese authorities are weighing the pros and cons of Bitcoin. China was once one of the world's largest purchasers of Bitcoin, but in 2017, China banned initial token offerings, ICOs, or digital tokens issued by cryptocurrency companies to raise capital. That same year, Chinese authorities shut down local cryptocurrency exchanges, showing that the Chinese Communist Party was also concerned about its impact on financial stability. On April 18, 2021, Li Bo, Vice Governor of the People's Bank of China, said Bitcoin is an investment option at the Bao'ao Forum for Asia.
Bitcoin and stablecoin as crypto assets. And so crypto assets, as Augustine just discussed, these are investment alternatives. They are not currency per se. And so the main role we see for crypto assets going forward, their main role is investment alternative. And as investment alternative, I think many countries, including China, are still looking into it and thinking about what kind of regulatory requirements.
Zhou Xiaochuan, the former governor of the People's Bank of China, said that regardless of whether it is a digital currency or a digital asset, it has to serve the real world. It is not the time to draw conclusions about digital assets like Bitcoin. It is a rare public deliberation by the central bank on the characterization of crypto assets such as Bitcoin, in addition to the digital RMB. Industry insiders believe that the comments show that China has made progress in its attitude towards the relaxation of Bitcoin, which is of great significance. On May 12, Tesla CEO Elon Musk announced that he had stopped accepting Bitcoin payments for Tesla vehicles due to concerns about the rapidly increasing use of fossil fuels for Bitcoin mining activities. It sent all cryptocurrencies, including Bitcoin, Ether, Litecoin, and Dogecoin, plummeting, shrinking their market value by about $400 billion. It has been less than 2 months after Musk announced on Twitter that you can now buy a Tesla with Bitcoin. According to several crypto digital asset insiders, Musk's announcement in February that Tesla would accept Bitcoin as a payment option was a major catalyst for the rapid spike in Bitcoin prices from $20,000 to $60,000. Another tweet from Musk stated, working with Doge devs to improve system transaction efficiency, potentially promising. It made Dogecoin, which had previously fallen 12%, immediately rebound 20%. Chinese website Sina Finance reported on May 7 that most buyers in the 87 billion market cap Dogecoin market are Chinese users, and Chinese users are presumed to account for 68.53% of total Dogecoin transactions cumulatively. Peter Thiel, who co-founded PayPal with Elon Musk, used to be a Bitcoin supporter like Musk, but he thinks the cryptocurrency could be hurting the US.
From China's point of view, they want to get, they don't like the US having this reserve currency because it gives us, a lot of leverage over, Iranian oil supply chains and all sorts of things like that. They don't want the renminbi to become a reserve currency because then you have to open your capital account and you have to do all sorts of things that they really don't want to do. I think the euro, you could think of as, was in part a Chinese weapon against the dollar. It didn't, the last decade it hasn't quite worked out that way, but that was, China would have liked to see two reserve currencies like the euro. And, even though I'm sort of a pro-crypto, pro-Bitcoin maximalist person, I do wonder whether at this point Bitcoin is also should also be thought in part as a Chinese financial weapon against the U.S., where it threatens fiat money, but it especially threatens the U.S. Dollar, and China wants to do things to weaken it. So it's sort of China is long Bitcoin, and perhaps from a geopolitical perspective, the U.S. should be a little bit be asking some tougher questions about exactly how that works.
The Chinese government is pushing hard for digital renminbi, and perhaps at this stage, cryptocurrencies like Bitcoin are an alternative to the US dollar. We will introduce the Chinese government's strategic plan to implement digital renminbi in future episodes. Now let's take a look at Bitcoin mining in China. It has been reported that the Bitcoin network uses the same amount of electricity as medium-sized countries. With an internet connection and the proper computer equipment such as a CPU, GPU, and ASIC, known as a mining machine, anyone can mine for Bitcoins. The process is as challenging as mining a mineral to obtain the Bitcoins awarded by the system every 10 minutes, hence the term mining and the person using the mining machine, miner. The choice of mining location depends on balancing several critical factors, including access to low-cost electricity, fast internet connections, a cool climate, and a favorable regulatory environment. For these reasons, China, Iceland, Sweden, Norway, Georgia, the Pacific Northwest, Quebec, and upstate New York are the main mining hubs for Bitcoin. China has a massive infrastructure of electricity, cheap thermal, hydroelectric, or wind power resources. More than 2/3 of the power generation for mining Bitcoin in China currently comes from coal. Bitcoin mining facilities are concentrated in remote areas of China with abundant hydropower or wind resources. For the first few years of Bitcoin's history, an ordinary laptop could play the role of a miner. The arrival of Chinese miners has shattered the equilibrium of this situation. With the help of Chinese designed and professionally constructed mining machines, they have staged an arms race for computing power, raising the threshold of mining tens of thousands of times. The mining machines produced by the Chinese companies Bitmain and Canaan Incorporated are sold worldwide, and the latter even once attempted to take out an A-share company to access the capital market. Bitcoin mining is straightforward: site selection, purchase mining machine, install and run. Mining machines are a fixed investment. Electricity is a daily expense. After the value of the Bitcoins mined exceeds the mining machine and electricity costs, the mining farm will start to make a profit. Of course, there is also the wear and tear of the mining machines. As new mining machines are introduced, the arithmetic power of the Bitcoin world is growing every day. Therefore, once breaking even, mining farms need to race against time to earn more Bitcoins before the machines are replaced. To obtain reliable power supply, private Bitcoin mines sign service contracts with local governments and grid companies at the very beginning of their establishment. Usually, such large electricity users are pretty popular with the latter, and hundreds of millions of dollars in electricity bills are paid annually after signing the contract. The construction and maintenance of the plant are also able to bring in considerable tax revenue, as well as solving part of the employment problem. But if the voltage is unstable or the power is temporarily out, the mine could suffer losses of millions of RMB a day. The Inner Mongolia province of China is the country's leader in Bitcoin mining. The mining power in the province alone exceeds the entire US. In particular, Inner Mongolia's Ordos is home to several world-class Bitcoin megamines. However, in early March 2021, news broke that the Chinese Communist Party proposed a new law that would ban virtual currency mining activities such as Bitcoin in Inner Mongolia by the end of April, helping China shed its label of attracting cryptocurrency miners with low electricity prices. Sichuan province is another one in China with a high concentration of Bitcoin mining. There are more small-scale mines in Sichuan than the world-class ones in Inner Mongolia. Sichuan has an abundance of electricity provided by hydroelectric resources, over 4,000 hydroelectric power stations within its borders at prices far lower than the price of thermal power using coal. Some mines are simply set up next to hydroelectric power stations to facilitate mining. Some miners even bought hydroelectric power stations at their own expense to ensure stable power supply. It is said that the price of electricity there is 20 cents RMB a unit. However, due to climate constraints, Sichuan's rivers experience a dry period in October each year, which also means the depletion of electricity, an essential element needed for mining. Like migrating birds, these mines in Sichuan begin to migrate in the fall to areas such as Inner Mongolia or Xinjiang, where thermal power is cheaper. In mid-April this year, a website, CoinMarketCap, alleged that a power outage in Xinjiang triggered a Bitcoin sell-off. Chinese miners are also looking for places to set up mines overseas. In January, it was reported that Iran had been experiencing frequent power outages for weeks due to a sudden spike in demand for electricity. Riza Costa, a Tehran-based journalist, reported that this was due to the proliferation of Bitcoin mining operations run by the Chinese. The allegations of frequent power outages due to mining have also drawn criticism for the 25-year comprehensive cooperation agreement signed between Iran and China last year. Critics say Tehran agreed to the colonial deal, allowing China to plunder Iran's natural resources and oil reserves. Iranian political commentator Ihsan Soltani tweeted that the Chinese are using Iranian electricity to mine Bitcoin and accused the Chinese of trawlers destroying the Iranian fishing industry in the Persian Gulf. The story of the Chinese miners has been playing out dramatically for years, using real-world electricity to mine the virtual currency Bitcoin in deep forests and ghost towns and deserts. Once time was their enemy, a day's delay would have cost them millions of RMB in profit. Now it seems that the green ideals of the global public may start costing them more.